Is it on yet?
Camera is rolling.
Okay. Hi, I'm Ralph Baker, and this is Trump and the Global Economy, Trump and the GE for short, quarterly speaker series where we bring experts together to parse through President Trump's policies and how they affect the economy and the community. And we bring together activists, economists, politicians, people from various disciplines, from real estate to entrepreneurs, so on and so forth, who bring a different perspective. We've been doing it for a while and becoming a hit, and people probably starting to look forward to it, particularly us. But today we're going to just explain the opiate crisis. And I have with me two people, the Brooklyn land baron and Torian Mitchell from ACE Network, and I'll let them give you a little bit about their background.
Yes, Christopher Townley. I came into economics through the real estate industry, first by buying my first apartment house at 21, and then became an appraiser, a real estate manager, a commercial broker, and then I read an interesting book about land rent and how it's the people who create the land rent increase. So you see in a city, we have 9 million people, the rent goes up because there's a demand for it, but we privatize that benefit. And so the theory that I started to come into after helping make people a lot of money in the real estate business is that that's actually the tax, that should be the tax source, and that people's wages should be their wages and not taxed. And so, not to belabor that point, but that's how I got into economics, and I studied the financial, particularly the Federal Reserve, and how that works, and how the 8 families that own the banks, and the 4 banks, the 4 horsemen of banking own what oil companies, and that also filters down into the families that run certain opium businesses, and have done so since the Portuguese. So it's a very interesting thing, how it all ties together. It isn't an isolated event.
Yep.
So when we talk about the opiate crisis, I'm sorry, we're talking about then the need for treatment and the need for doctors, and so there's a chain of ever money-making operations in that endeavor.
I'm Torian Mitchell, I'm a wealth manager that primarily focuses on SMEs and closely held businesses, typically family-run corporations. And I like to consider myself a little bit of an amateur historian as well, because much to my colleague's point that when you begin to not only look at markets, you have to look at things from a historical lens. Economics is no different, finance is no different, to be able to see some of the long-term plays in, as I like to call it, our crystal balls, that we like to, pontificate with some degree of accuracy, but a lot of it is predicated on historical basis. So it piqued a significant amount of my interest to always look back and see, have we been here before as a civilization, as a society, and began to notice some very apparent patterns, which Chris even alluded to earlier. So yeah, happy to be here and ready to discuss this opioid crisis and how it is affecting both the macro and micro level.
Okay, so first we'll start with, have each person give their take on the economy. And then we'll go into the opiate crisis and how it sort of ties into the economy. But at a high level, unemployment rate is pretty low. It's around 3.5 to 3.6%, and it hasn't been this low consistently in decades. And you would expect the economy to be white hot. As an economist, I was an economics major in college. These numbers are kind of surreal, to be honest with you. This unemployment rate this low, and you expect the economy to be white hot. You expect it to be strong wage growth, and you expect workers to be able to switch jobs or demand higher wages. And you would expect the Federal Reserve to be raising interest rates to kind of cool down the economy. That's not quite the case. Wage growth is solid at around 3%, which, again, you would think the economy is pretty strong with low unemployment and wage growth around 3%, but you have the labor participation rate is extremely low as well. So I think a low labor participation rate is one of the reasons why the unemployment rate is so low, because you have so many people who are not in the labor force. They're not counted in the calculation for unemployment. So you have maybe like over 95 million people not in the labor force. Mm-hmm. And the labor participation rate is under 64%. Hasn't been this low consistently since the early years of the Reagan administration. It's improving. It is improving. People are going back to work, but it shows you just how poor the economy or how weak the economy really is. And give you an example, I think there were probably like the labor participation rate was around 64%, and back a few years ago when Bernanke was the Fed chairman, he said it was a national crisis. So it hasn't gotten better. While President Trump trumpets, no pun intended, the strength of the economy, I think it still points to a lot of weakness in a lot of areas. And this trickle-down theory from the Obama administration that's still going on today is not really working. The Fed looks at something called the personal consumption expenditures, ex food and energy, as a metric for inflation, and they're trying to get it to 2%. It's still below, they're trying to get it to 2% a year, still below 2%. After all the stimulus, after all the money printing, and after all the Fed's attempts to spike asset prices like real estate and the stock market, the personal consumption expenditure is still below 2%. So if it's not working well, we continue to do the same thing over and over and over again. Stock markets are going up though. That's good for somebody, but I don't think it's good for the populace when you maybe have 10% of the country probably control over 85% of the stock market. Other things at a high level, rail traffic is slowing, which is rail traffic is a vital sign. One of the economy's vital signs. It's down like year to date, down over 4%. It indicates that businesses are shipping less goods and services cross country. So when you see railroads laying people off to spike the bottom line, like CSX, Union Pacific, Norfolk Southern have been laying people off. Canadian National today, which is a Canadian railroad, just announced large layoffs to combat headwinds for its top line. And Canadian railroads have so far haven't had the same headwinds that the U.S. railroads have had, but now they are experiencing it as well. So, people talk about the trade war with China. I think even without a trade war, the economy still would have been declining. I think the economy has peaked. We've gone through a decade of economic expansion. At some point, it has to peak and slow. I think we're at that point. So that's sort of high level statistics about the economy.
It's to your point that I think really the employment numbers is what gives us the greatest sense of what's really going on in the economy. As even speaking both to the CPI, can folks afford the basket of goods? Can they afford medication? Can they afford milk? Can they afford the roof over their head? Basics. I think the majority of folks here aren't looking to necessarily be billionaires, even multimillionaires. I think most folks just want some financial stability, which means that I can cut a check, pay my bills, and still have a little bit left over every single month without palpitations and sweats, because you're paying, the old adage, robbing Peter to pay Paul. And I think as a country, that's kind of what we've been doing, is robbing, but in this case, our future to pay today's bills. And we're seeing it in the employment numbers. One of the things that really stands out, I think any president typically will grab on to any good news and say, look at me, it's because of me we have this good news. So I don't necessarily knock Trump for attempting to co-opt the employment numbers, but the narrative that's often overlooked is when we look at, well, what sectors are actually growing. And we're seeing what's typically considered unskilled labor. That's even the terminology is debatable. That's right. As we consider agricultural workers unskilled, but if you spend any time on the farm, you would know that's a slap in the face to call an agricultural worker unskilled. However, what the point is, when we look at what the wages are, Fight for 15 is still happening. Like Fight for 15 didn't stop. Some states have adopted it. New York is one of them. Washington State is another one. But overall, minimum wage is stagnant. The majority of the growth are in sectors that focus on minimum wage. And I want to say it was maybe about 5 or 6 years ago, Obama was still in office, and I can't recall where I read the article, but it just kind of blew my mind when they touted something like 3 or 4 million jobs are open because of the skills gap. Remember at the time, that's when we were declining in the unemployment rate. So it's like, wait a minute, you have this dichotomy of employers saying, I can't find qualified folks, although at that time, any type of job, a secretary job was getting posted, like on Indeed, for example, and they're getting 1,000 applications for the simplest job. So it spoke to the degree of disconnect in the actual public. So we're, getting this number, say, oh, here's some good news, we're on the decline. I was like, wait a minute, how are we having folks that have this significant gap, employers, and they can't find the appropriate skills? Something's amiss.
That's right.
And that gap still exists. Like, employers are still talking about we have a skills gap, while our employment numbers are, I think, at the history since, we've never recorded this low since we've been recording unemployment data, right? So it just speaks to this complete disconnect, to the point, markets, it's institutional capital. We know it's not the average investor, is not the mom and pop investor. In fact, at this point, the majority of investments that are coming from the average person are in 401ks. And we can certainly speak to whether that's a wise idea or not. I tend to disagree because primarily there really aren't any protections for the average employee by putting their cash in a 401k. But in terms of where are folks going to get any type of return, any type of retirement, any type of affordability, Medicaid just cut their coverage to now 60%. So that means that if you have to engage with a supplement plan B, essentially the long-term care version that's run by the state, you now have to cough up 85% of your assets before they can approve only 70% of your bill. So we're looking at cuts that we were already warned about in 2012. When we looked at the CBO and they said, we have to triple taxes simply to meet our obligations. And what have we done since 2012? Cut after cut after cut, because it's politically popular, it gains votership, and unfortunately I have to say it is largely predicated on ignorance. That we push this idea that, hey, we should be getting tax breaks, yes, versus understanding where taxes should be coming from in the first place. So, I think all in all, it just has created this melting pot that, for all intents and purposes, if everyone's crystal ball is right between the analysts, whether it's JP Morgan, whether it's various hedge funds, double line, kind of the gods of finance, everyone is saying when, it's not a matter of if, but that we're going to be looking at another 2008, 2009 type recession. But we're a largely different environment than 10, 11 years ago at this point. And I think that's the real concern, is that where are we today? We're even more concentrated have even less opportunities and room for growth. So, we won't have a Big Short movie in 2022 to kind of show the savvy and witty moves of how the Fed just pulled everybody together and, almost pulled an Ocean's 11 type ending with the country. We don't have that type of room anymore. So really, I think without serious policies that are looking at the practical,
Yes.
not just high level, but the practical impacts on a family household, which we'll get into the opioids, but, and really, I think a lot of us agree that we're seeing the opioids as simply an effect,
Right.
simply a symptom
That's
of
right.
that
A
entire
derivation.
And they tend to
Bubbling.
treat the effects rather than the cause.
Exactly.
They treat the
Yep.
symptoms.
Yeah.
But I had a couple, just two things quickly. When you talk about the quality of jobs, or where
Yeah.
the jobs are coming from,
Yep.
mostly coming from, I'm not gonna say mostly, but a lot of jobs are coming from food and beverage. Like last month, like I think October, food and beverage and
Yes.
drinking establishments.
Interesting.
With the biggest
So-
growth areas, and that's
Yeah,
tend
yeah.
to be those jobs that may be low paying. It also jobs that cater to wealthy people, like leisure activities.
Sure.
Like
People
That's a good
expendable.
point.
it's
Yeah.
lodging and that type of stuff, and
Yeah,
going,
yeah.
and going to vacations. Another thing is when you talk about the skills gap, I think that's it's a narrative that the government wants, and then also the powers that be want to put out there. They have to have an excuse why that so many people don't have jobs, or there could be anarchy. It's your fault you don't have a job because you should have been an engineer, or you should have been a hedge fund manager, or you should have been. So they always have to make a reason why we're living so well, and you're not. Otherwise, there could be anarchy.
You know what?
But I
Just to jump on that point real quick, I'm gonna throw a hand grenade because it's still kind of a mystery to me. So you all remember ITT Tech, right?
The what?
ITT Tech.
Yeah.
Yes.
So ITT Tech
Yeah.
got essentially yanked, lost the accreditation, and was labeled a fraud. And it really boggled my mind because one, when we look at like that skills gap, to your point, what ITT Tech did is they proliferated a vocational education. As our growth is focused on technology, someone still needs to build the walls to house the data centers in. Someone still needs to put in the plumbing. Someone still needs to put in the electrical work. So,
That's right.
and that's what ITT Tech did. So when we see like the reduction of our vocational educations in our schools and even outside of a high school education, then it really begs that question, like, what is the real intent? Because
What are you training people, what are you
What are you
educating them
training-
for?
exactly.
Not to be free thinkers.
Exactly.
Waitresses.
Your terminology, your phraseology of disconnect it is so rampant in the economics and political system, political economy. People don't really understand, the stock market's up, things must be good.
Yeah.
Even if they have no chance in investing in, it's really a gambling scene, they're
Yeah.
gambling money.
Yeah.
And so we wonder what we are educating our young for. I was fortunate enough to send my son to private school, and one of the main topics or theses of the school was to produce a free thinker. So you teach them a bunch of different things, history, liberal arts, and so they learn how to think for themselves.
Sounds like
so they can
Montessori.
analyze things, right? And we don't see that. We see test takers.
Yep.
And one of the benchmarks I would ask is, people that do have jobs, one, can they afford to buy the products they make? They
Yeah.
can't even afford to buy them, unless it's a car, maybe because they can buy gasoline and support a particular system.
Exactly.
Now, New York, by the way, came up with a $15 minimum wage recently.
Yeah.
Last year, I think it was the end of the year or the beginning of this year. And I was saying that is the wrong focus, because you give somebody a minimum wage of $15, three things happen. One, they're in a higher tax bracket.
Yep.
So not only are they paying more taxes because the percentage stays the same, they're paying more of a percentage.
Right.
And then, historically, for hundreds of years, wages are the last thing to go up, so the first thing that goes up are prices. So what we have is an inflationary, which is planned, by the way, in my view.
Okay.
And it makes the financial system, particularly the mortgage system, more secure. So the person that gets a raise is paying more tax twice, and then they're paying a higher price for things. So in a 6 months, a year time, their minimum wage increase is pretty much eaten up by those three
Right.
factors. So I find that that's the wrong focus. What they need is more buying power. So maybe those echelon of people shouldn't be paying any tax or should get a reduction in tax. And we should look for other sources. I know there's going to be a tax increase. What are those sources of taxes? And my idea is that it should come more from unearned income than somebody earning and working. And there's a lot of unearned income.
It
So
is.
what we see, for example, is, and this is where the land thing comes in, so I'll segue into it briefly, and we can see it under different administrations. Under the Clinton administration, the radio waves were auctioned off. Now, if you study, not esoteric, just American Appraisal Institute, what is land includes all natural resources untapped. So you and I aren't going to vote, we're not going to go to an auction and try to get the radio waves, but Spectrum, Verizon, and those companies are. And what the effect is that they're paying under market for them. Then fast forward, under certain regimes or presidencies or whatever the political power is, they auction off the lumber or they auction off the coal. Right now it's the coal.
Yep.
When Trump took over, it was like Trump ends the war on coal. I never knew there was a war.
Right.
But whether we should burn it or not, they're paying under what it's worth. So they're actually getting a rent because it's technically land.
Right.
So they get to say, I'm making 25% interest because I'm a good businessman. So the coal miner isn't getting any more because they're saying, well, we can only pay wages a certain amount.
Right.
And he has to pay for everything necessary to get to the coal to mine it. So you see, so that's
Yeah.
unearned income.
Yep.
So whether we should burn coal, oil, or not, they're coming from the public land, from the public domain, and that could be a source of the tax,
Yep.
which could be put into education, healthcare.
Yeah.
So it's that kind of thing that I'm thinking of as a little more holistic, I think, that cause and effect of, well, what are we doing with our resources? And I don't mean to be socialistic about it at all. It's already here. It's in the parkland.
I was going to say that approach would require a complete restructuring of
Yes.
the way that we participate in economics, our system.
It's a different system that you're not going to see.
Oh, 100%.
And in a big way.
Well, it was, when everybody was practically equal in 2008, 2007. Nobody was complaining about natural resources because they were all
With the
going down.
dividends.
They were all going down. So it's like, so now we have a problem because somebody stepped in. So when you have the Federal Reserve talking about we're going to raise asset prices, no economist in the history of mankind has ever said let's spike the stock market, spike real estate or other assets to grow the economy. So when you say buying power, right, that means that when you spike these asset prices, people with minimum wage have less buying power. You can buy less of a house, you can afford less rent because the rent's going up.
Yeah.
You can afford, so basically things that we need, and what economists call inelastic goods. So
Yep.
you have these investors to figure out, I can spike costs for college.
Yeah,
24%.
It's
And
practically,
that's supposed to be a
practically,
non-for-profit public good.
right, it's practically inelastic. And we talked about this last time, it's practically inelastic good. You have to go to college. And price spiking housing, you have to have someplace to live, and spiking costs for healthcare.
Yep.
You have to have some place, you have to be able to afford healthcare. So that shouldn't be allowed. And so now you have less buying power. And it's all driven by the Federal Reserve. And and you say you're talking about free thinkers, it doesn't really pay to be a free thinker because people will see you as a threat and they want you silenced.
Right.
What we're doing now is it's not really that dangerous, but it's kind of. But anyway,
Yeah, I get the point.
when you're a free thinker and you're not. My thing is that the people who are educated should be explaining this to the public. They shouldn't be using education to weaponize themselves against the public. And the other thing was that you talk about buying power. We have less buying power, and it's Fed driven, and it's driven by the government. Another thing is that I think it was around 2013 when my book had just come out, and my business school was having an event, and they had I think they had someone from, I can't think of the guy from CNN who was moderating it. They had a bunch of investment bankers on the panel. They were describing the economy. So I drove up from Virginia. I was at a basketball camp with my son, my alma mater. So I drove up, and I barely got here on time. And so I guess we started talking about the economy, and it's a bunch of investment bankers on the panel. I didn't really know they were going to be there, and they were talking about we're beating up on bankers too much and all this other stuff. And then they basically were making an argument, and a lot of people in the crowd were making an argument that, you know, people don't have engineering degrees because it's too hard to be an engineer, and that if we had more engineers to fill these jobs, maybe the unemployment rate wouldn't be so high. So it's like when you try to explain to, especially to African Americans, that when the government's printing money and giving it to their donors, or printing money and giving it to the oligarchs or bailing companies out, these companies are going to use this money to weaponize themselves against the public. And when your son doesn't have a job, or your grandson doesn't have a job, they're going to blame you for it. It's going to be your fault that you don't have a job. How come we're rich and you're not? And you can't. And you try to explain it to them, they don't want to hear it. And it's all the narrative has already been written that
They want a result.
the narrative has already been written that if your kid had become an engineer, that they would be unemployed. And I made the argument that nobody told these investment bankers to go retrain themselves in 2008. Nobody said that too many investment bankers, that their business model does not work for the number of people they want to hire. They want to invest their own capital and grow even in a recession.
Yep.
And so, by nature, investment banking is a cyclical business. You know, M&A activity goes up, stocks, trading goes up in a strong economy, and vice versa. They try to take the cyclicality out of it by investing their own capital, and they can hire more people. There are too many investment bankers, and nobody wants to tell these people that you got to go get a real job. And, they didn't tell these bankers, Jamie Dimon and Lloyd Blaine, find these people to go retrain yourselves and get a real job and quit sitting around wasting taxpayer money.
But it's an interesting thing, because you talk about practical, and I think it really comes back to that. So here's an example of what happened maybe 15, 20 years ago. There were people that were engineers, and you have to realize there are different systems in different countries.
Yep.
So in the American system, maybe an engineer is going to be making between 50 and 100 grand, which is a big price difference, but maybe they're living in somewhere in a rural place, or maybe they're living in New York City.
Mm-hmm.
So what happens is, and a typical person in India might be in a system where they make 20 grand a year or 10 grand a year.
Mm-hmm.
So that person becomes an engineer. So the job that somebody's making 50,000 a year is outsourced to that job, to India,
Yep.
making 10,000 a year. So they're looking at how much they're going to spend on labor. But the person that went through the educational system in whether it was a small provincial school in the United States or a big university, they have those expenses to pay.
Mm-hmm.
They have higher rent to pay. They have higher taxes to pay, and then they don't have a job.
Right.
So, you know, there's something to look about. Who are we providing things for? Whom are we providing things for? And so I think that's a very important thing that continues to happen. And we keep saying creating jobs, but our system, just like it's predicated a lot on raising the rent, because everybody fixes stuff up and raises the rent, they're predicated on eliminating employment. So, for example, you can see that there's less token takers at the token booths, there's less bank tellers, there's no toll collector at the highway. Now, I'm not saying there should or shouldn't be. I'm saying that those jobs should be, this person should be retrained, and those jobs should be replaced, because that person still exists.
Exactly.
And they're not counted as numbers any longer.
Right.
So then I give the, I've been making up something called Modernize This. So if you go to this, there's a couple of things about the subway I'd like to talk about, which is related to this, okay? Related to the privatization of rent. So the guy, they built a Q train, are you familiar with it?
Yep.
Okay, Second Avenue, right?
Avenue,
Let's
yep.
talk about the Manhattan part, this is the important part, huh? No, I'm kidding. I live in Brooklyn. So the guy that owns a building on 86th and 2nd Avenue gets more rent than the guy on 73rd and 1st. But he didn't build the Q train. So therefore, his rent is more, he gets to mortgage more, borrow more money, and buy another building. So, you know, that's what I'm talking about, under income and the privatization of land rent. And also, if you look at, there was an ad about 2 years ago showing This is practical stuff. It's boring and mundane, but I think important.
But when the Federal Reserve said we're gonna spike asset prices, they're trying to favor the people.
I know they do.
They're spiking what you just,
Yeah.
you know?
So they made an ad, and they were showed old timers like myself cleaning the subway, and I think the machine was a 1981 something or other. Okay, so that they have countdown clocks, okay, that they were obsolete when they were delivered because there was already an app to tell you the train schedule. So my question is, why do we have to modernize that when the trains are late, they stink, you know?
Right.
So I have this thing, modernize this, the countdown clock wasn't even right, it skips over the second train coming, so if I say, well, should I take this train to the next one? It's not even doing the basic thing it's supposed to do.
Yeah.
Who got paid for that? Who got paid for that technology? It's like, I'm gonna take this room and I'm gonna take something and make nice wallpaper, and it's a brand new thing. It's a facade, and somebody's getting paid for that, and they're really not making a substance kind of change to the subway system.
Yep.
They're not more on time, they're not longer trains, they're not.
Right.
And so they make it look like it is, but it's, what is it, $55 billion budget for the capital improvement?
Yep.
And there are less employees.
No, I think you bring up a couple of really great points, and I think it all boils down to human capital. We do not value human capital in this country. As we look at...
There's also greed somewhere in the system.
Say that again.
There's also greed somewhere in the system. That if
If
I take people out of the system, there's more money for somebody else.
That's capitalism at its peak. I mean, that's
For
the
the people,
core.
but it's not that way at all.
Right.
Yep.
We put more emphasis on capital efficiency. That's what really at its core what capitalism is.
So you mean management? People who are not losing their jobs.
Right.
It's true.
But that's right.
True.
But that is for
A classic example is Germany is the third largest producer in the world.
It is. Yep.
Third largest. They have half the population we have, but less than half population that we have.
Right.
And the CEOs of those companies like Miele, Bosch, Porsche,
Yep.
Mercedes, that's their lifelong career.
Right.
You know, they don't go in there and say, well, how am I gonna get my $100 million retirement benefit in case I get canned, you know?
Yep.
They spend their time there. And how can such a small country be they're behind China and the US?
Yep. And China
It's a
just
little
surpassed
country.
the U.S.
Because
in
they
terms
care
of-
about what you're talking about.
Exactly. I was, without, I guess, being labeled as a socialist or communist.
Social
But when we look at, imagine, because when we just look at the numbers, we're almost at a third of our population is not being counted. And to your earlier point, that now you are removed. So you literally disappear. There's still breath in your lungs.
Yeah.
You still have life on planet Earth, so we have to assume that there's some value in that individual, but not from the way that we count our economics.